What's going on, everybody? It's Stas here. So the markets were a bit choppy today. The S&P 500 went up 0.1%. We had the Dow break even, the Nasdaq 100 go up 0.3%, and the Russell 2000 went down 1.6%. So I want to break down some technicals today, go over a bunch of stocks to buy now, and also talk a little bit about where my head is at and what I've been doing in the market. So sit back, relax, hit the like button, make sure to subscribe to the channel if you want to see daily content like this, and get yourself some free money. $30 from M1 Finance, 2 stocks from WeBull. Check out my Patreon. All of those are linked down below. So let's get into it. SPY today was not doing much. Again, S&P 500 broke even, went up 0.1%, barely had a green day. But if you look at the intraday chart, you can see it was very choppy. SPY was at 405 pre-market. It spiked up to 407, back down to 405, back up to 407, back down to 405, and yet again, back up to 407. And we're in this tight range. It's very obvious on the 5-day, 5-minute. Tight range between 407 as resistance and 405 as support. That is what we talked about yesterday. We were in that range yesterday and the day before that. So for short-term direction, we need to see, okay, are we going to break 407, hit a new all-time high, maybe go to 410? If so, bulls will gain momentum at that point in time. Even though we are still overbought in the short term, I mean, we could still see a spike if 407 breaks, right? But if 405 breaks, watch for that gap to fill on the downside, probably to about 398 to about 400, 402. That would give the SPY ETF here about 1.7 to 2% downside from where it is right now. So that is what I'm watching when it comes down to the S&P 500 index. I still feel like we are in need of a pullback in the very short term, and people might twist my words and be like, oh, Stas is bearish. No, guys, I'm not bearish. I'm still bullish on the markets, but I'm talking in the very short term. I think we need to see a bit of a drop-off before we continue this beautiful uptrend that we've been on, right? So S&P all over the place today. QQQ all over the place today, guys. Let me pull up this chart. You can see the 5-day, 5-minute. We're obviously still under roughly 331, 332. That's a big resistance stemming back from the past 1, 2, 3 trading days. And on the intraday chart, you can see we opened up at about 330, dropped to 329, popped up to about 332, dropped to 330, back up to 332, dropped to 330, and back up to 332 at market open, or close rather, and we're up a little bit here in the aftermarket hours. So the markets are really just consolidating. I think they're waiting for some sort of direction, a catalyst. We had the Fed minutes today. That probably caused some choppiness, and honestly, nothing really new came out of the Fed minutes. A lot of the same old crap. And yeah, markets are consolidating, and I think QQQ, a healthy spot to go to, and I've been saying this, is right around 325. That would be about a 2% drop from where we are right now. The RSI would come down to a healthy level at that point. I think that'd be good. And the VIX today, guys, take a look. Volatility Index down 5%. You guys can see we're getting closer and closer to that level that we were at the beginning of 2020 and at the end of 2019, right around 13, 14, 15 points here on the VIX. So volatility is currently dying down, but the closer and closer the VIX does get to 12, 13, 15, 16, even here at 17, guys, I'm getting more and more nervous when it comes down to more volatility in the near-term future, because we've seen every time it's gotten down to these levels, it's spiked back up to the mid-20s, low 20s, higher 20s, even back to the 30s. So watch out for the VIX. Watch out for the bond yields as well. I forget what the 10 years at right now. Let me check my Yahoo Finance very quickly. 10 years actually at 1.65 right now. It went down 0.2% on the day today. So watch out for all of these metrics, guys. So that is what I'm seeing overall when it comes down to the markets right now. Let me know your thoughts down below in the comments as always. And you can see my watch list here on the left side. Let me move my face very quickly. You guys can see half of the watch list was red, and the other half of the watch list was green. We had Snapchat up a ton, 5.8% today, and we had Mara down 11-12% as Bitcoin and crypto in general did take a hit today. NNDM was down, NEO was down, and we'll talk about some of these stocks today in this video. So let's just get right into it, guys. And overall, the way I'm looking at the market right now, I'm not being too aggressive with my buys. In fact, I bought a lot of stocks on that dip that we saw over the past month and a half, and I was buying on the dip for a lot of these different stocks, and I'm holding on to those. Maybe I'll lock in some profits here in the next couple of weeks, but the way I'm looking at it is I have a lot of cash, right? I'm still pretty cash heavy. I mean, that's obviously a relative term. 50% is cash heavy for some people, when 75% is cash heavy for others, and maybe 10% is cash heavy for some people. And for me, I'm sitting at about 25-30% cash right now. If this market does see that pullback we're talking about, hey, that might be a good opportunity for me to put that 20-30% cash to work, right? And some of these stocks I'm looking at, one of them is JP Morgan. And like we mentioned a couple videos ago, a lot of banks are set to report earnings this month. We have JP Morgan, Wells Fargo, I believe Goldman Sachs, Bank of America. A lot of the big dogs are reporting earnings. JP Morgan is in 1 week from now on the 14th of April. And today, guys, JP Morgan did well. It outperformed the overall markets. It went up 1.6%, up $2.40. And you guys can see we're currently off about $7 from the all-time high, down about 4.2% to be exact. And let me double check. That is the all-time high on JP Morgan, right? Yes, of course it is. Guys, pretty much everything is at all-time highs right now. And I really like the wedge that we are forming on JP Morgan. You guys can see it on the hourly chart. We're making lower highs, but we're also making higher lows. You can see we held 152. We rallied up today to 155, putting us right at the resistance of the wedge. And I want to see at this point in time, is this 155 level going to break? Are we going to take out not only the resistance of the wedge, but also the resistance, the high point on the stock that we haven't broken out of since the 26th of March. In fact, we've tested this level even before that in the middle of March. Multiple times we failed at 155. Once, twice, 3, 4, 5 times. So I think if 155 breaks, we take out the resistance of the wedge, we're going to fill the gap up, maybe not straight to 161, 162, but I see upside to about 158 initially, which is the high point from earlier in March. And if 158, we fill up to that point and break out of 158, watch out for the fill at that point, probably to about 161, which again gives JP Morgan from where it is right now of upwards of about 4.5, 5% upside, especially if it breaks 162. I mean, we're talking 6, maybe 7% upside. And of course, the earnings report is going to be very important to watch out for. Maybe a lot is already baked into the stock price. And mind you guys, JP Morgan, a lot of these banks have done very well as of late, so keep that in mind. It's not like they've been hit down in the dumpster and there's not much lower they can go. It's the opposite. They're at all-time highs, and if earnings come in not looking too great, that could send the banks down a little bit. So JP Morgan, I'm watching it. Marathon Patent Group, or it's not called that anymore. It's now Marathon Digital Holdings, Inc. This is down 12% today, and this is one that we've called out a bunch here on YouTube and on Patreon. We've made some money on this one in the past, and this recently did very well, and rightfully so. Bitcoin's been crushing it, and this definitely outperformed Bitcoin, no doubt about it. I mean, it went from $28 to $60 literally in the past week. Gosh, guys, that is insane. I wish I put all my money in this, but that would not be smart. That would not be smart. You see, if you do high-risk things like that, sure, you can make a lot of money, but you can lose your face. You can lose your shirt if the stock ends up going the other way and you're over allocated into a stock. And not just Mara, we're talking in general, any stock out there, right? So Mara is down a chunk, right? It's down about $12 from the all-time high here, down about 20%. So it's in a bear market pretty much. It's on the cusp of a bear market. And let me pull up my Coinbase very quickly to see what Bitcoin's at. Okay, Bitcoin's at 55.9 right now. It's down from 60K about a week ago. And by the way, if you guys want to get $10 free from Coinbase, $10 worth of Bitcoin free, check out my link down below. We each get a little bit of Bitcoin, especially if you use that link. And it is an affiliate link, by the way, guys. So yeah, Bitcoin is down. Mara is down a lot more than Bitcoin. And that's the thing, if Bitcoin is doing well, Mara is doing better than Bitcoin. It's a leveraged way to play Bitcoin, kind of the way gold miners stocks are a leveraged way to play gold. It's very similar in that sense, right? And it's leveraged on the way down as well. So when Bitcoin goes down a little bit, yeah, you better believe Mara's going to go down a lot more. And Mara's just getting slammed. Again, like I said, down 20%. And at this point, RSI is getting pretty attractive, down at about 40. We're approaching the 50 and the 180 moving averages here on the 4-hour chart. This could end up being a point where we bounce. This could be a high or low opportunity, or a dip buy rather opportunity for Mara, especially if we hold 45, which was that high from a couple weeks ago in the middle of March. So I'm not all in on Mara. I'm not going all in on this quite yet. But if we see low 40s, okay, listen, guys, if 45 breaks, we'll probably go to low 40s, right? And if we do get to that point, that is going to be an entry point, in my opinion, anywhere from $40. And let's say we somehow get to 33, 35. These are going to be adding points, in my opinion. And you could argue here it's too early to add, but you could also argue it's a good spot to add an initial position and then maybe average down if we got to the low 40s. High 30s, mid 30s. So it really depends, but overall, Mara, I really like it. Ticker symbol MARA. Spotify is another one, SPOT. Spotify went down 0.8% today, and they also report earnings this month at the end of the month on the 28th of this month of April. And you guys can see overall, Spotify is at a big sticking point. It's tough here. 290, 295 roughly has been a sticking point. Not only in 2021, but pretty much a lot and most of 2020. You guys can see on this 4-hour chart, Spotify hasn't, it did break 280, 290 before. It went up to 390, but other than this rally up to 390, it struggled many times at 290. Once, twice, 3, 4, 5 times, 6 times a couple weeks ago. Now we're struggling again, make it 7 times. And if we pull up this yearly chart, you can see it even better on this time frame. So I think if 290 could break on Spotify, and I'm not sure if I had an alert set before, maybe it triggered, but I'll set another one. I'm going to create an alert and put it at, let's say, $291 on Spotify. If that could break, if the 180 moving average at $300 on the 4-hour chart could also break, at that point in time, guys, I think momentum is going to shift on Spotify. And if we get up above 307, back into this horizontal channel here that we were in between November and the end of February, I'm thinking from 308, if that breaks, we can go to 350 fairly quickly. And don't be surprised if we do that. So watch out for Spotify. C Limited SE is another one I'm watching right now. This one is down about $40 from its all-time high, down about 12%. And I'm very impressed, although it is overbought, the RSI is overbought on the 4-hour chart. I'm very impressed with how it's been able to rally the past couple of days. It's gone from 190, broke 200, it broke that 50 moving average and the 180 moving average, and now we're sitting at 245, and we're pretty much at a very critical point, right? This 240 level was resistance back in January, also back in the middle of March, and now that we're breaking out of this point, we're also breaking out of the neckline of the head and shoulder. Take a look at this. Left shoulder right here, if it wants to let me do it. There we go, guys. We have the head right here and the right shoulder right here, right? The fact that 240 is breaking, The head and shoulder neckline is breaking. This is a very good sign for Sea Limited. And if you guys didn't even know what Sea Limited is or what the heck this company does, they engage in the digital entertainment, e-commerce, and digital financial service business in Southeast Asia, Latin America, rest of Asia, and internationally. And you guys can go on Yahoo Finance and look through their bio and learn more about this company. I'm not here to dive deeper into them, but I'm just here to say this is looking good for the shift of momentum from bearish to bullish, right? This is looking good. So watch out for SC. Li Auto is another one. Today, the company announced it plans to offer up to $750 million in convertible senior notes. The stock is down 13% on that news. NIO is also down. NIO, we'll talk about that in a second. NIO, I still own a substantial position as a swing trade and as a long-term investment, and we'll talk about that in a second. But Li Auto here, the descending triangle is real. You can see it very clearly on the 4-hour chart here. We're making lower highs ever since we peaked out at about 49. And looking back, and I know hindsight is 2020, but looking back, gosh, guys, EVs were in a state of euphoria back in, the end of the summer here in the U.S., heading into the winter months. This thing went from $14 to $50. NIO was at $65, $70. I mean, these are euphoric prices. I think this correction is much needed, and I'm sure, and I'm not 100% positive, but I'm sure over time, this is going to rebound and have a nice continuation of the uptrend. But right now, we're seeing not the bubble pop, but we are seeing some of the hype not necessarily die down, but we're just seeing it deflate a little bit, right? And this is good for those that want to buy in and hold for the long term, or if you want to swing trade it for a couple months, a year or two, whatever, this could be a good opportunity. And if we break the support of this descending triangle at about $21, $22, this could go into the teens very quickly, guys, very quickly. And I'm not too sure how long it's going to stay there, but just keep it in mind that we are seeing the descending triangle play out, and we're very close to seeing a big dump off into the teens. So Li Auto, watch out for that. And NIO, again, I'm in this one both long-term and as a swing trade, and there's no change in trend in sight. In fact, we're also seeing a descending triangle on NIO, right? We're seeing lower highs being made. Today was a confirming sign of that, and now it looks like we want to dump down and make a lower low and potentially take out $34, $35, which has been support ever since the beginning of March, and that would be the descending triangle playing out. If 35 were to break, we probably could see low 30s in NIO in the very short term, which could be a pretty nice buying opportunity depending on how you're looking at this particular stock. So Li Auto, NIO, I'm very, very interested in these, watching these closely. And I almost forgot, NIO said today, this is a big day for NIO, guys, it said its 100,000th mass-produced vehicle was rolled out of the production line today in Hefei in the Advanced Manufacturing Center. So that's awesome. 100,000th mass-produced vehicle. That is great news. And the stock, it doesn't care. It's down 7%, guys. But if you believe in NIO long-term, which I definitely do, and I'm not all in NIO, all my money's in NIO, but I do have a small portion of my portfolio allocated to them, this downwards push should be an opportunity to add more. And I'm not saying to do anything, to buy anything. I'm just saying that's my opinion, right? And the last stock for today is Verizon, ticker symbol VZ. This one just broke out of a big resistance point. And if you pull up this yearly chart, you can see 58.50 was a big sticking point. Now we broke out of it. That was resistance back in January, back in June, and in April of 2020. And now that we broke out of that, I see a clear path up to about $60, $61, maybe even $62. And it's not the craziest big move, the biggest potential possible, but there is about 3-4% upside if Verizon is able to fill that gap. So I like the change of momentum here, the fact that we took out 58, and I want to see if this lasts. And if so, they report earnings coming up here on the 21st. They do well with earnings. yeah, we might be able to fill that gap to about $60, $61. So those are the top stocks I'm watching, thoughts on the market, kind of what I'm doing a little bit. So make sure to leave me your thoughts down below in the comments. I hope you all enjoyed this video. If you did, hit the like button, subscribe to the channel. Make sure to go down below, get into the Strive Smart Discord chat, get $30 from M1 Finance. And by the way, check out my video earlier today if you want to see a stock I added as a long-term investment in that M1 Finance portfolio. I made an update video earlier. I'll link it right down below. Check that out. And you could also check out my Patreon if you guys want buy and sell alerts, call outs, all real time, by the way, moves I'm making, morning update videos as well, and more access to me throughout the day. That is on Patreon, and that is linked down below. Same with the M1 Finance link and the Discord chat. Check all of those out down below. So I'll catch you all in the next video. Thanks for watching as always. Keep crushing the market. Stay safe out there, guys. Peace out.